The following program is furnished by The Truth About Your Future, LLC. The views expressed do not necessarily reflect the views of this station. This information is education and not financial advice. Consult a financial advisor before investing.
The Truth About Your Future with Rick Edelman is brought to you by Global X ETFs, dedicated to providing investors with unexplored and intelligent solutions. And by Bitwise, a trusted guide in crypto has never mattered more. Connect with their dedicated team of crypto experts nationwide at bitwiseinvestments.com. And by Invesco QQQ, a fund that allows you to access the innovators of the NASDAQ 100, Invesco.com. And by Edelman Financial Engines. Rick Edelman is a board member, consultant, shareholder, and client of EFE. But EFE is unaffiliated and has no say over the content of The Truth About Your Future with Rick Edelman.
This is where technology, innovation, and personal finance come together.
This is The Truth About Your Future with Rick Edelman.
And now your host, Rick Edelman.
Thanks for joining me this weekend on The Truth About Your Future. Coming up on the show today, what's happening in the real estate market. A conversation with Anthony Pompliano of the Pomp podcast. The latest on cybersecurity. Investing in ESG, plus Gene's Word of the Week. You know, we've all been seeing what's been going on in the economy. The stock market has dropped dramatically this year. The bond market is down. The crypto market is down. The big question everybody's been asking, what's going to happen to real estate? That seems to be the one major area of the investment world that has been resistant, if not outright immune from the market's declines. But it looks like real estate is now weakening, heading toward a recession of its own. The median sales price of existing homes has hit $430,000, but now has since fallen from that, and real estate prices are now down $10,000 since June. They're still nearing the highest price since records began being stored in 1999, but it looks like the party is over in terms of prices. Existing home sales have fallen for 6 months in a row, and it's because of the housing affordability. It isn't. The Housing Affordability Index is the worst since 1989. Even though housing prices have started to come down in the past couple of months, they're still up 40% over the past 2 years. Home prices have risen so much faster than wages that people are literally being priced out of the market. You add on to that the fact that mortgage rates are now at a 13-year high. The result is that people can't afford to pay the monthly rate, the monthly payment on a 30-year mortgage based on the sales price of the house coupled with the high mortgage cost. There's no way they can afford it, and they're priced out of the market. As a result, nearly 20% of the houses that are on the market available for sale, they've cut their prices more than 10%, as homeowners are beginning to realize the market is drying up and they can't sell their houses for as much as they could have, say, 4 or 5 months ago. By the way, this is not just an American issue. Prices are down in Canada 8%. They're down in New Zealand, Brazil, Chile, Spain, Finland, South Africa, India. Prices are down everywhere across the world. In Canada, housing prices are down 25% from a year ago. It's not that bad here in the United States, at least not yet, but it is a problem. I mentioned that home buyers are canceling their deals to buy homes. That is happening now as well. Not only are homeowners lowering the prices of their houses, people who have already signed contracts to buy a house are canceling those contracts at the highest rate since any time since the beginning of the pandemic. 15% of all the sales contracts have been canceled. People are walking away from their earnest money on the attitude that I signed a contract to pay $430,000 for this house. That house is no longer worth $430,000. Or the mortgage rate just went up and I can no longer afford the payment. I therefore have no choice but to walk away from the contract. This is leaving the sellers stuck with the houses that they're trying to sell. This is a bit of a problem. Not only do we have the challenge of housing prices and housing affordability, we have home builders facing a problem. Housing starts have fallen dramatically, and builder confidence is falling with it. The Builder Confidence Index has fallen for 7 straight months. It's now at the lowest level in 2 years. So we are seeing a weakening across the board in real estate, with the number of homes being built declining, the number of people willing or able to buy homes declining. We're beginning naturally to see an equal decline in the price of houses. If you're thinking of buying a house, you might want to wait, as prices are likely going to fall further. If you're thinking of selling a house, you might want to hurry up and sell it before those price declines get more real. Meanwhile, there is one aspect of the real estate marketplace that is skyrocketing: the number of people who have become real estate agents. Membership in the NAR, the National Association of Realtors, is at an all-time high. 1.6 million people are real estate agents now. That's a record. An 82% increase in the number of new agents compared to a year ago. And historically, that is always a sign of a market top. Why do people want to become a real estate agent? Well, think about it. If housing prices are skyrocketing, the value of a house is up 40% over the past 2 years, and the commission is 6% on a $400,000 house, we're talking about a $25,000 commission. You get half of it. Now you're talking about a $12,000 commission for selling a single house. Wow. We're talking about easy money, isn't it? Well, not so easy at all. According to the National Association of Realtors, realtors who have 16 years of experience have average incomes of $85,000 a year. Good income, but it isn't setting the world on fire. More importantly, real estate agents who have less than 2 years of experience, their average income, $8,800. You know why? Because they only sold one house. Whose house did they sell? Their girlfriend's. A good neighbor down the street who they just, play tennis with and who happens to be selling their house. Sure, you can sell my house for me. And that's the only house they managed to sell, and they earn an average of an $8,800 commission. So you need to recognize that getting your real estate license and deciding to hang out your shingle as a real estate agent isn't necessarily going to be the path to high income, especially now that we're beginning to see the likelihood of a real estate recession, fewer homes being sold and at lower prices. It means that the compensation for real estate agents is probably going to come down. Now, of course, all real estate is local, and this is going to vary dramatically all across the country in given cities, in given communities within given cities, depending on the types of properties you tend to focus on. The bottom line is, with more real estate agents than ever and fewer houses available to sell, it means there's increased competition, and you'll begin to see offers of cuts in commission rates. Hey, I'll sell your house for a 5% commission in order to win the deal, and cutting your comp as a result. So that's what we can expect in the short-term future for the rest of this year, probably into 2023 as well, about residential real estate. I'm Rick Edelman. This is The Truth About Your Future. You're listening to The Truth About Your Future. I spend a lot of time on crypto education. Normally, I talk to a lot of financial advisors and members of the public, but I recently did an event with the Bipartisan Policy Center called The Future of Crypto and Blockchain. This event was for members of Congress and their staffs, as well as public policy officials from the executive branch. We had dozens at the event. Thousands viewed the recording as well. We're working hard to improve the level of crypto knowledge and education among members of Congress and the executive branch, because we need more legislation and regulation to create the rules of the road, making crypto safer and more readily available to all investors across the country. So I was really excited to be the keynote speaker at the BPC event in September.
You're listening to The Truth About Your Future with Rick Edelman. Thanks for listening to today's show, and thanks to Bitwise Asset Management for being our sponsor. Rick asked Bitwise to support the show because Bitwise has just one mission: to help you understand and access the opportunities in crypto. As crypto continues to grow in scale and complexity, a trusted guide is more important than ever. That's why Bitwise has built a nationwide team of crypto experts to help you. So take advantage of Bitwise's team. They work closely with financial advisors, institutions, and individual investors just like you. Talk to a Bitwise expert today or sharpen your crypto knowledge with Bitwise's awesome library of content. You'll find great help whether you're a crypto beginner or a financial professional. Crypto has major risks to consider, including the loss of your entire investment. So before investing in crypto funds, visit bitwiseinvestments.com for their library of content and to learn about the risks with these investments. That's bitwiseinvestments.com.
What do all the greatest innovations have in common? Agents of innovation. Ordinary people who shape the future by putting their money behind the right ideas. Invesco QQQ is a fund that allows you access to innovators of the NASDAQ 100. So you don't have to be an inventor to help create what's next to come. Be an agent of innovation with Invesco QQQ. Learn more at Invesco.com/QQQ. There are risks when investing in ETFs, including possible loss of money. ETFs risks are similar to those of stocks. Investments in the tech sector are subject to greater risk and more volatility than more diversified investments. The NASDAQ 100 Index comprises the 100 largest non-financial companies on the NASDAQ. You can't invest directly into an index. Before investing, carefully read and consider fund investment objectives, risks, charges, expenses, and more in the prospectus at Invesco.com. Invesco Distributors, Inc.
Midterm elections are just around the corner, and you might have questions like, what should I be doing with my money now? Or, what could happen in the stock market if my side doesn't win? Join Edelman Financial Engines on Tuesday, October 11th at 2 p.m. or 8 p.m. Eastern for our brand new webinar, The Elections in Your Portfolio, Separating Fact from Fiction. You can register now at efewebinar.com. You'll learn how the midterm election results can impact the stock market based on decades of market data. And you'll learn how to help position your portfolio for the elections and beyond. Don't miss this important and timely webinar. Join us for The Elections and Your Portfolio, Separating Fact from Fiction, on Tuesday, October 11th at 2 p.m. or 8 p.m. Eastern. There's no cost to attend and no obligation. Register now at efewebinar.com. That's efewebinar.com. Edelman Financial Engines. From here forward.
You're listening to The Truth About Your Future. I'm Rick Edelman. I'm really excited to bring onto the program a good friend of mine, Anthony Pompliano, most commonly known as Pomp. Pomp, if you don't know Pomp, you are missing out. He not only manages a portfolio of about $500 million in the Bitcoin and crypto industry, most importantly, the Pomp podcast, one of the most popular podcasts in the world, downloaded more than 20 million times. Pomp also writes a daily letter that is read by well more than 150,000 investors every morning, and his tweets have 700,000 followers. If you are trying to follow the world of Bitcoin and crypto, etc., and you're not following Pomp, well, you're not really doing the job right. Pomp, welcome to the program. Good to see you, my friend.
Thank you so much for that warm introduction there.
So, it's not the most fun of times that we're having this conversation. We're in the middle of yet another crypto winter. Talk about what your observations are about what's happening in the crypto world these days.
Yeah, look, the Bitcoin and crypto industry is pretty unique in that it has had multiple boom and bust cycles, but it's been on an expedited timeline. Most people look at the technology industry and they go back and they think of the last kind of bad time and they all point to the tech bust of 2000. And yeah, there was the global financial crisis, but that was more kind of macro market, not just tech. I think with the Bitcoin and crypto industry, we've seen this happen over and over and over again. And a huge piece of it is, one, it's being built on top of the internet. So there's been faster global adoption than we saw with the internet or other technologies. But two is that there's not a lot of the kind of intervention in the market that you may see elsewhere. And so a simple example would be hours of operation. Obviously, the stock market ends up being closed on weekends or certain hours during the day, whereas the Bitcoin and crypto market trades 24/7, 365. And so what that ultimately does is it allows it to operate as a more free market. I don't know if you would argue that it's a completely free market, but definitely more of a free market. And so naturally, human psychology plays a huge piece. When prices start going up, people get excited, they FOMO in, and eventually the kind of excitement gets ahead of where the value or the adoption of the assets are. And so there's a correction. And then, of course, on the other end of the spectrum, as we get towards the bottom of markets, people get much more fearful probably than they need to be. And there's some sort of reflexive response. And so I think that that's really what we're watching is just these assets are tied very closely to human psychology. It's new. There hasn't been a ton of high frequency trading and things like that, which can kind of smooth out a lot of the volatility. But over time, I do think volatility will go down and we'll get less of the boom and bust cycles. But what is the famous words in finance? Like this time is different. I don't think that this time is very much different than other past bear markets. And so people just got to survive and then wait till the good times.
You mentioned FOMO, the fear of missing out. That is a key psychological behavior that so many folks fall victim to. Everybody loves to buy when the price is high, and everybody loves to sell when the price is low. And of course, buying high, selling low is the exact opposite of what you're supposed to do to achieve long-term investment success. So where would you say we are in the midst of this? I mean, we saw Bitcoin hit almost $70,000 last November. It's trading now around $20,000, a 70% reduction in value. Would you say that we're closer to the bottom? We have more to go. What do you see as the long-term upside? Are you losing faith or confidence in this? Do you regret your engagement in the crypto community?
Definitely don't regret it. Back in 2018 in the bear market, Bitcoin had fallen from $20,000 to about $3,000. And I went on national television and was getting yelled at by Mr. Wonderful, Kevin O'Leary, and he was forbidding me from buying the assets and generally kind of lashing out saying, hey, look, this is falling 85%. What are you doing? And I think that your point about people selling right when it's near the bottom ends up happening quite a bit. But the prices have fallen down, 70%, as you mentioned. And if I liked Bitcoin at $69,000, I love it at $20,000. And what that requires is for you to constantly revisit the thesis. So there's definitely folks who I think are just kind of blind believers, and they just say, hey, look, I like something, and no matter what happens, I won't change my mind. I'm not necessarily in that camp. Like I am willing to change my mind if I see material differences in the underlying fundamentals. But when you look at Bitcoin, and we use that as maybe a proxy for the overall crypto industry, Bitcoin, the hash rate or the strength of the network is near an all-time high. There's multiple on-chain metrics around how much Bitcoin is being bought up by retail that's near all-time highs. And things like the Lightning Network, which are kind of the scalability solutions, those also have fundamental metrics that are hitting near all-time highs. And so it's a little bit of kind of a value investor's dream, right? If you think of the stock market, in my opinion, what do value investors like Warren Buffett wait for? I can't wait for price to detach from the actual value, right? And when the price is so low compared to what I think the business is worth, then I'll pounce. And I think the Bitcoin and crypto industry has not had a lot of value investor mindset, right? It's pretty much been speculation or excitement about how good it could be in the future. Now what you're seeing, though, is a lot more professional investors are stepping in and saying, wait a second, if the underlying fundamentals continue to strengthen, but the price is drawn down 70%, I should go do some homework. Doesn't mean I'm going to buy it, but I definitely should go look at it. And I think that's what makes it so exciting right now.
There have been two ways for people to engage in crypto as an investment. One, traditionally, you simply buy Bitcoin or Ethereum or whatever other crypto coin or token you choose. Bitcoin, Ethereum, obviously the two leading ones. So one theory was simply buy Bitcoin, call it a day. Others have said, I really don't want to buy crypto itself. I don't understand it. I'm not comfortable with it, or I'm not allowed to do it. My firm won't let me. My advisor doesn't help me, what have you. So as an alternative to buying Bitcoin, I'll buy stocks of companies that are in the crypto space. Stocks like Coinbase, the biggest publicly traded exchange. Stocks like Riot Blockchain, which is a Bitcoin mining company, and other publicly traded companies along those lines. What's your view for people who are interested in investing in the crypto space? Do you recommend that people buy the actual coin, buy Bitcoin, or do you recommend that people buy companies that are in the crypto space instead?
Yeah, it's a great question. I don't know if there's a single answer for everyone. I think that is probably more so optimized for what somebody's goals are. And so similar to, maybe precious metals, there's a lot of people who just want to go buy gold and hold gold. But there's other people who say, hey, I want productive assets that have exposure to that. And so they'll go buy the gold miners. I think that Bitcoin and kind of the surrounding industry and infrastructure is very similar. But what I do know is that Bitcoin itself, whether it is being mined through miners like Riot, Marathon, and Core Scientific and others, or simply being held on balance sheets, somebody like a MicroStrategy, it ends up having very unique properties. And so the story here, in my opinion, is that this has been a retail-led kind of adoption cycle. Normally, you would see kind of large financial institutions, governments, things like that go ahead and adopt an asset, and then it trickles down to the individual. Here, it was actually the opposite. We had the individuals first. Now we're starting to get financial organizations, public companies. And then I think the hope among the community is that eventually you'll get the nation states and central banks to adopt it as well. But the reason why that's important is because a lot of the financial assets we're talking about, whether it's public companies that are mining, holding it on their balance sheet, even maybe some of the trust structures like GBTC or BITW at Bitwise or whatever, those weren't available when people started to actually buy the asset. And so just naturally, given kind of the early adopters, they had to buy Bitcoin directly or any of the other cryptocurrencies. And so I think that now as the aperture expands in the financial sector across all these different products, what you're going to see is it's going to bring in net new types of investors, right? To your point, there's a lot of financial organizations that say, look, I want exposure. I can't go buy Bitcoin directly, but you know what? I will buy GBTC, or maybe I'll buy some of the miners. I'll buy a MicroStrategy stock. But it also isn't just about the long-only equity investors. One of the most interesting things to me was when MicroStrategy was issuing all of that debt to go buy Bitcoin, they had a line out the door and they kept oversubscribing these kind of corporate bond offerings that they were doing. And so in that situation, you now are bringing in a whole different set of investors kind of from the debt market who understand the asset or want to get exposure to the asset. And there was a public company willing to give them a new opportunity to invest. And so I think that that's one of the most exciting stories moving forward. It's just what are all the ways that people are going to come up with to use these assets and also to offer opportunities to various types of sophisticated investors who may not be able to invest today.
I think you raised two important issues here. We're talking with Anthony Pompliano. He's the head of the Pomp podcast, one of the most popular podcasts on the internet, dealing with crypto and Bitcoin and such along those lines. The two issues that you really raised, Pomp, that are important. One is that there's now a wide variety of ways that you can invest in the crypto space. In the old days, it was Bitcoin or nothing. Now there's a wide variety of ways. You mentioned one in particular, GBTC, the Grayscale Bitcoin Trust. Grayscale is one of the largest owners of Bitcoin. They have a security called the Bitcoin Trust, trades under the symbol GBTC. There's also Bitwise's BITW, as you mentioned as well. These trusts are popular with investors because there's really no other way that an ordinary investor in an ordinary brokerage account can buy these securities. You can trade them easily at Charles Schwab, for example, in a Schwab brokerage account. And that's simpler, easier, more familiar than buying Bitcoin in any other way. But these things are popular predominantly because there's no ETF in the marketplace. The SEC hasn't said yes to that, even though Grayscale and Bitwise, among others, have both filed applications with the SEC to create an ETF. The SEC has repeatedly denied those applications. Most recently, just a few weeks ago, they said no, once again, to Grayscale's application. Grayscale responded, as you know, with a lawsuit. Grayscale is now suing the SEC, saying that the SEC has no legitimate basis for the denial of its application. Talk about your views of this. Do you think that Grayscale is going to win this lawsuit, regardless of whether they win in court? Will it spur the SEC to change their opinion and say yes, finally, to a Bitcoin ETF?
Yeah, it's a great question. I don't know what the answer is. When I try to understand what's happening, a key piece to it is the Grayscale Trust is trading at a discount to NAV. And it's not, a 2% discount. It's like a 35% discount. And so the optimists in the market say, hey, maybe I should go buy that. And when they convert to an ETF, there's some, kind of extra alpha that could be generated by having bought something that was a discount to NAV. It's such a huge discount. But I think that the pessimists, they look at it and they say, wow, that's a lot of value that people put into the trust and now has quote unquote been lost until it is converted. And so regardless of kind of how you evaluate the investment opportunity, both past and future, I think that the question becomes, in the United States of America, we claim to be the financial capital of the world. New York City and kind of American financial markets, they are the shining example on a global stage. I believe that to be true. I think most people, both foreign and domestic, believe that to be true. The question then becomes, well, why is there Bitcoin spot ETFs in multiple other jurisdictions, but not here in the United States? Now, if you were to ask the regulators that, both at the SEC, which have a direct hand in approving this, but also many other regulators, they have a laundry list of concerns or questions. And so it's not like they're just saying, hey, we have no reason for doing this, or they're not giving the information. Now, you can argue over the validity of their concerns or whether their concerns have been addressed or not, but they do have a list. Where I think this situation got more complicated was when the SEC decided, hey, we're not going to approve a Bitcoin spot ETF, but they approved the futures ETF. And not just a long futures ETF, but a short futures ETF as well. And so now you kind of start looking at the totality of data points where you have a discount to GBTC on NAV. You've got the futures approved, but not spot. You've got spot approved in other markets. And it begs the question, why is a spot Bitcoin ETF not approved in the United States? Now, we are going to find out, right? Is kind of my big takeaway from this is Grayscale seems, and their public statements seem to support the idea that they are committed to taking this to court and kind of fighting this decision. The SEC seems pretty convinced that they have a strong argument as to why they haven't approved it. The courts will decide, right? And I think that really ends up being a key data point. Because if you were to ask market participants, what are some of the milestones that need to be reached in order for this industry to continue to grow? Regulatory clarity is one of the number one answers you'll get. And so whether it's through the regulators just putting out rules, whether it's through court proceedings like it seems we're going to see with GBTC and the SEC, getting regulatory clarity, I think, will be a tailwind for the industry. And it seems like that's what GBTC is really trying to force here. Now, the word of caution is clarity does not mean that we will always get the answers we want. Right? Clarity just means that we know what the rules are. And I think that is remains to be seen is where will this end up? Your guess is as good as mine.
So given all the above, what is it you're recommending that people allocate in their portfolios to crypto? How much should you place of your total portfolio?
Yeah, when I think of like recommendations, the way I always think about it is usually the people that ask for recommendations, they are going to work and they're trying to be the best teacher, fireman, marketing manager, accountant, right? Like they're not a professional investor. And so naturally what ends up happening is if you're not a professional investor, if you don't sit and think about this stuff all day, you're at a disadvantage in the market. And so in those situations, the best thing to do is to always ensure that you don't blow yourself up, right? It's kind of like be a risk mitigator. And so when it comes to something like Bitcoin and cryptocurrency, although the enthusiasts, and myself included, are incredibly bullish on this stuff, and we spend all day and have dedicated a large portion of our lives to understanding it and talking about it and investing in it, the average person probably is better off somewhere between like 1% to 5%. Right? And where, yes, there's asymmetry that could happen. And if that happens, it could have a material impact to their portfolio. But if they lost 1%, let's say, of their portfolio, they're mad, but it's not the end of the world. They kind of live to fight another day. And so I think that the speculative nature of the assets, it's important because that's what pulls capital into a market. We saw that with the tech boom, obviously, of the late 90s. We've seen that with many other markets. But at the same time, there's a lot of people who invested in the late 90s in tech. It was the right industry, but when it busted, guess what happened? We got Amazon, we got Google, we got a couple of companies, but there's a whole lot of money that got destructed there as well. I think that's similar to what we're watching happen now, which is there will be some big winners out of this industry. Trying to pick individual ones is pretty hard. And so naturally, I just say to folks, like, go find the blue chip, which in my opinion is Bitcoin. That seems to be the one the regulators all agree isn't a security, seems to be the one that is the most well adopted, has the longest history, all that stuff. 1 to 5%, set it, forget it. And if you come back and the Bitcoiner's dream is realized, amazing, you're a genius. If you come back, 10 years from now and Bitcoiners are the biggest idiots in the world, you're not going to lose sleep over it, because that 5% probably now is zero, and you've made a bunch of money and kept investing, and like you're good to go. So it's kind of a hard question on just a blanket advice standpoint, but I think that's really the way that, at least from a framework standpoint, I think through it.
And that's consistent, as you know, with the advice that I give in my book, The Truth About Crypto, that a low single-digit allocation is plenty to achieve the goal. Let's not get carried away with it. One final question for you, Pomp, and that is the job market in crypto. If you were counseling a kid who's entering college, trying to figure out what should they do as in a career prospect, is the crypto community something to consider from a career perspective?
Yeah, we think this is probably one of the biggest opportunities. We've built an entire business in that sector. And the idea really is just around when you're coming out of college or high school, or you're kind of young in your career, really the two most important things to focus on, it's not making money. It's like, who do you work for? So that the individuals that you're actually going to spend time with, learn from. And then also the second thing is, where is the most opportunity to grow? And what I think that we found is, if you look at the crypto industry as a whole, it is one of, if not the fastest growing economic sector globally in terms of the amount of venture capital that's coming in, the amount of enterprise value that's been created, the amount of pay that individual employees are making, the amount of investment returns that are being captured. So from that standpoint, there's a ton of growth, but also it's still pretty early, right? It's not like, hey, this has all been kind of arbed away and there's no room to grow. And so when I think of a young person today, it's don't go start at the 2-person startup. Because in that situation, usually what you're doing is you're taking founder risk without the founder reward, right? You're not going to get half of the company like the founders. And so that becomes a little bit tough. Also, you probably shouldn't go join a really, really large corporation where innovation and some of the exciting stuff isn't happening. The best thing to do is probably go find like a Series B, Series C startup with a lot of funding that appears to have a lot of traction and momentum. And the reason why that becomes so important is because if you get in there and you do a good job, one, you'll gain a lot more responsibility over time. So they'll say, hey, you started out as, on the marketing team, and now all of a sudden you're a manager, and now we're going to add in other responsibilities, and you can kind of quickly grow your experience and your expertise. But the second thing is, whether it's good or bad, a lot of your kind of reputation will be tied to the success of the company. Everyone's met somebody who says, oh, I was early at Uber, I was early at Airbnb, I was early at Facebook. And early could be one of the first 10 employees, or it could be one of the first 100 employees, right? The really successful companies, you put that logo on your resume, you take that experience and expertise that you developed at that business, and that's a great foundation to build a career. And so I think that that's really where crypto kind of fits in on the job market side. It's just there's so much opportunity, pay is good, remote work is possible, it's an important mission, and then you look at that as a foundation for the rest of your career, and I think that it's a great place for people to go look.
That's Anthony Pompliano of Pomp Investments and the Pomp Podcast. You can follow Pomp at Twitter. His handle is @Pompliano. Pomp, great to be with you. Thanks for joining us on the show.
Absolutely. Thanks so much, Rick. I appreciate it.
You know how challenging it's been to manage your investments successfully this year. You've heard Rick Edelman caution you just about every week that, given today's combination of high market volatility and stubbornly high inflation, the investments that worked in the past might not be the ones to help you achieve your goals today. This is especially true if you need to generate current income from your investments. But where can you turn if your traditional approach isn't working anymore? At Global X ETFs, we can help. Our ETFs offer you investments that you might not have considered before. Asset classes with income-producing potential, including MLPs from the energy sector, real estate investment trusts, preferreds, and dividend-paying stocks. We've been providing our investors with income-oriented investments for more than a decade. Explore our full lineup of ETFs and get our research and insights and more all at globalxetfs.com. Or ask your financial advisor about Global X ETFs. globalxetfs.com.
Meet Schwab Intelligent Income, a simple, modern way to pay yourself from your portfolio. Overcome the complexity of income needs in retirement with automated tax-smart withdrawals that you can start, stop, or adjust at any time without penalty. Plus ongoing monitoring, so you'll always know where you stand. And since lower fees means more money for you to invest, you pay no advisory fee. Available with Schwab Intelligent Portfolios. Visit schwab.com/intelligent income, a modern approach to wealth management.
You're listening to The Truth About Your Future with Rick Edelman, sponsored by Choice. Choice is changing the way Americans save for retirement by making it possible to invest in Bitcoin, crypto, and other alternative assets inside your IRA. That's right. Whether you open a deductible or a Roth IRA with Choice, you can invest in Bitcoin and 22 other digital assets in your retirement account. You can also buy stocks, mutual funds, ETFs, gold, real estate, and more, all in a single retirement account. There's no hidden fees or account minimums, just more control over your retirement savings. And Choice makes it ridiculously easy to combine all of your old retirement accounts with a rollover concierge service. So if you've switched jobs in the last few years and have been putting off rolling over your old 401k, make sure you check out Choice. Head on over to retirewithchoice.com/Rick. That's retirewithchoice.com/Rick.
You're listening to The Truth About Your Future. One of the most exciting elements of technological innovation is the internet. And one of the scariest elements of technological innovation is cybersecurity. This isn't a phrase that existed probably 20 or 30 years ago, and now we are more worried about a protection of our personal data than ever before. So let's talk about this. And to help us do so, I'm happy to bring onto the program Pedro Palandrani. He is Director of Research at GlobalX ETFs. Pedro, thanks for joining us.
Thanks for having me, Rick.
You know, we're seeing, as you know, more headlines than ever about hacking and cybersecurity. Tell us the status of all of this. Is this just something we're going to have to tolerate?
Absolutely. So like you say, cybersecurity is essentially going from a nice to have to an essential technology, not only for companies, but for governments as well, and for us as consumers as well. And this is essentially because the tech surface has expanded dramatically over the last 10, 15 years. We moved from data centers, for example, to a very diversified base of end devices like smartphones, laptops, and even technologies like cloud computing, software as a service, IoT, you name it, right? So that's making it a lot harder for companies to control access, to control data, and to control pretty much all of their infrastructure. And at the same time, cyber attacks are becoming more sophisticated than ever, and they're targeting key areas of our economy. So last year, for example, if you recall, we got the Colonial Pipeline cyber attack that targeted the energy industry. We also got the CNA Financial cyber attack on financial services, of course. We also got the JBS, the largest meat producer in the world, being hacked. So a lot of these cyber attacks are going directly to key areas of our supply chain. And because of that, our governments are paying attention to cybersecurity more than ever. And all of this is just translating into greater spending on cybersecurity.
Now, in the old days, those hackers were just kids playing around, seeing what they could do. But these days, these cyber hackers they're rogue nations. These are enemies of the United States. To what degree do we think we have a handle on who these hackers are?
I mean, clearly the companies, governments are doing a lot of work in trying to understand this. You have organized or criminal organizations. You also have traditional countries where you're seeing some cyber attacks going after other countries. And this is especially in the context of geopolitical tensions. Earlier this year, we saw the Russia and Ukraine situation that created some sort of a spike in the number of cyber attacks. And that's really something that we as a nation need to pay attention, but really the entire world and governments around the world are paying attention to this more than ever. I think something very important to understand is that these cyber attacks are also getting a lot more sophisticated, using AI, using ML. So cybersecurity solutions also need to scale. So instead of fighting one of these fights with knives and facing like a gunfight, we now need to arm cybersecurity solutions and companies with AI and ML solutions, for example, that are going to be able to be at the same level of the cyber attacks that we're seeing around the world.
So it seems like this is a never-ending battle. You know, the good guy builds a 10-foot wall and the bad guy shows up with a 12-foot ladder. So every time we develop some new innovative way to protect ourselves, the bad guys figure out some way to overcome that.
Unfortunately, that's somehow a reality, right? There are always not only newer technologies that allow the cyber attackers to perform one of these hacks, but at the same time, there are more and more entry points than ever. So as you think about newer technologies in the next 5, 10, 15 years, such as autonomous vehicles, robotic surgery, medical devices, all of these are going to be connected to the internet. And so unfortunately, that's going to be a new entry point for cyber attackers to go after. And this is essentially going to create greater needs, greater demand for cybersecurity solutions. So for us as investors, that's actually good news, right? Because we know that the longevity of the cybersecurity theme is going to be there. So all of these tailwinds are going to be very important for the cybersecurity theme just going forward.
So talk about that. What is the current state of technology in cybersecurity? Are we losing ground? Are we holding our own? Where does it stand?
I think we're definitely gaining ground. You know, a lot of these companies are coming up with very strong technology. So I talked before about AI and ML, for example. That's important, an important technology, because the attacker can only succeed once, and that's already enough for them. But the defenders need to succeed essentially 100% of the time. So it's a very uneven playing field. So that's why technologies such as AI and ML are starting to become increasingly important for companies and organizations around the world. Another tech development that we're seeing from companies is, for example, zero trust network. So zero trust essentially provides users with access to internal apps, but without the need to connect to the company's network or expose the user to the internet. And this is very important because that architecture allows the user or the hacker actually not to move horizontally throughout the network. So we're seeing a lot of new technological developments in the cybersecurity theme. Companies are trying to protect the network. Companies are trying to protect the cloud, messaging, identity, and there are so many different verticals within cybersecurity where we're seeing many companies trying to come out with new technologies.
Yeah, I've heard the joke that there are two kinds of companies: those that have been hacked and those who don't know they've been hacked. And so clearly, cybersecurity has to be a growth industry. So what would you say are the investment opportunities? How can we, I hate to put it in this context, Pedro, but if we're going to have to suffer with the issues of hacking and security threats, we might as well figure out a way to make money at it. So what are the investment opportunities?
Exactly. And again, I think this is a theme with a lot of longevity. At a macro level, there are so many tailwinds that we talked about today. At a micro level, Rick, these business models are extremely attractive because most of these companies are software as a service companies. So they have great retention rates, they have great profitability in most cases. So that's a very attractive investment opportunity. Here at Global X, we have the Global X Cybersecurity ETF, ticker BUG or BUG, one of my favorite tickets actually around here. That ETF right now has over $1.2 billion in assets under management, and it really tries to provide exposure to cybersecurity companies that generate at least 50% of the revenue from the theme in regard. So we're not diversifying too much into other areas of the economy. This is really a pure play focus on cybersecurity, and one way to access that universe of companies that are not only protecting the network or the cloud. These are really all the companies that are trying to come out with great solutions for the theme that we just discussed today.
Gene and I are big fans of Bug. We own that fund as part of our diversified portfolio in technology, the cybersecurity ETF from Global X. The symbol is BUG, Bug. And I think I agree with you. It's a really strong play there. You had mentioned a couple of occasions AI and ML, artificial intelligence and machine learning. How big a role do these technologies play in cybersecurity and within the Global X ETF?
Again, it's one of the technologies that we're starting to see a lot of the companies developing internally, right? You can even think like a company like Google with Gmail that tries to protect all of your messaging capabilities, right? Gmail is essentially trying to protect you from opening up an email that could be a scam. And these scams and phishing attempts are getting a lot of sophistication. So AI and ML is increasingly becoming important for companies. Google actually just acquired Mandiant, one of the companies that we had within our BUG ETF. And M&A activity is one of the trends that we're seeing in cybersecurity. I know, Rick, you're an expert in crypto and digital assets, generally speaking. Even companies like Coinbase, for example, acquired a cybersecurity company earlier this year. If I recall correctly, the name of that company is Unbound. And again, we're seeing a lot of these large companies in different areas of our economy starting to acquire cybersecurity solutions because it's top of mind. They need to provide cybersecurity solutions to their clients, to their customers. And it's the large tech companies, the new entrants, the emerging technologies are trying to come up with strong solutions to protect their data, to protect their users, and pretty much their entire infrastructure stack.
I'm glad you mentioned the M&A activity because I was going to ask you about that. We're talking with Pedro Palandrani, the Director of Research at Global X ETFs. And I was going to ask you about the M&A activity because I've noticed the same thing, that there's a lot of M&A going on. And that's not true for the rest of Wall Street. M&A activity is generally down this year because of the market volatility and lower valuations. But in the cybersecurity space, there's a lot of activity. What would you say this means? What message should investors take from the fact that companies are engaging in buying other companies in the cyber field?
Absolutely. And you're right, Rick. A lot of M&A activity and something that it's not only happening, but we would expect that to continue to be the case, at least within the next 12 to 24 months. Just for context, typically, cybersecurity providers specialize in a limited amount of product types, right? So whether that's endpoint security or network security or identity security, the trend that we've historically seen is that companies are targeting niche markets. If we think about it, that's forcing companies to secure their data using a patchwork of different branded services. So for customers, that's not ideal, both from a cost standpoint, but also to avoid inefficiencies when essentially seeking to protect their data, users, and all of the information that we just talked about. So that's really creating this new trend of M&A within the cybersecurity theme, where a lot of companies are just trying to combine their solutions to really bring to market very solid and strong cybersecurity solutions. So for us as investors, that's great. We're seeing a lot of premiums being paid for these cybersecurity companies, and we can try to benefit from M&A activity in the space.
In other words, you buy the companies today, wait for them to get acquired, which that happens at a premium. So yeah, it's a wonderful investment strategy for this space. I have found it really interesting that in the old days, when you were trying to choose a company you wanted to do business with, you evaluated that decision based on the company's products and services, the price, the customer service, and so on. But today, increasingly, we're forced to ask about their cybersecurity policy. We're forced to ask, how safe am I to be working with you? Because if I'm going to connect my bank account to you, if I'm going to share with you my social security number or other personal information, I need to know that you're going to treat that data with a high degree of security. And so companies are forced to spend a lot of time paying attention to cybersecurity in a way that 10, 15, 20 years ago, they never really had to do this. This is why I'm convinced that cybersecurity is one of the biggest growth areas for investing opportunities, and why Gene and I own the Global X cybersecurity ETF. The symbol is BUG, BUG. as part of our diversified portfolio. So I strongly encourage you to take a serious look at this Global X ETF. You can learn more about it at globalxetfs.com or by asking your financial advisor about Global X, and the symbol is BUG, BUG. That's Pedro Palandrani, Director of Research at Global X ETFs. Pedro, thank you so much for joining us on the show today.
Thank you, Rick.
Stay with us for more here on The Truth About Your Future.
Allow us to introduce you to Tom, an ordinary person who helped shape the future by putting his money behind the right ideas. Tom enjoys tending to his tomato garden and is currently developing the perfect blend for his homemade spaghetti sauce. Tom is also accessing companies that help change the course of the aerospace industry by investing in Invesco QQQ. Invesco QQQ is a fund that allows you access to innovators of the NASDAQ 100, which goes to show you don't have to be a rocket scientist to help push progress forward. Become an agent of innovation. Learn more at Invesco.com/QQQ. There are risks when investing in ETFs, including possible loss of money. ETFs' risks are similar to those of stocks. Investments in the tech sector are subject to greater risk and more volatility than more diversified investments. The NASDAQ 100 index comprises the 100 largest non-financial companies on the NASDAQ. You can't invest directly into an index. Before investing, consider the fund's investment objectives, risks, charges, and expenses. Visit Invesco.com for a prospectus with this information. Read it carefully before investing.
Midterm elections are just around the corner. And you might have questions like, what should I be doing with my money now? Or, what could happen in the stock market if my side doesn't win? Join Edelman Financial Engines on Tuesday, October 11th at 2 p.m. or 8 p.m. Eastern for our brand new webinar, The Elections in Your Portfolio, Separating Fact from Fiction. You can register now at efewebinar.com. You'll learn how the midterm election results can impact the stock market based on decades of market data. And you'll learn how to help position your portfolio for the elections and beyond. Don't miss this important and timely webinar. Join us for The Elections and Your Portfolio, Separating Fact from Fiction, on Tuesday, October 11th at 2 p.m. or 8 p.m. Eastern. There's no cost to attend and no obligation. Register now at efewebinar.com. That's efewebinar.com. Edelman Financial Engines. From here forward.
You know how challenging it's been to manage your investments successfully this year. You've heard Rick Edelman caution you just about every week that, given today's combination of high market volatility and stubbornly high inflation, the investments that worked in the past might not be the ones to help you achieve your goals today. This is especially true if you need to generate current income from your investments. But where can you turn if your traditional approach isn't working anymore? At Global X ETFs, we can help. Our ETFs offer you investments that you might not have considered before. Asset classes with income-producing potential, including MLPs from the energy sector, real estate investment trusts, preferreds, and dividend-paying stocks. We've been providing our investors with income-oriented investments for more than a decade. Explore our full lineup of ETFs and get our research and insights and more, all at globalxetfs.com. Or ask your financial advisor about Global X ETFs. globalxetfs.com.
You're listening to The Truth About Your Future. Let me ask you this. Are you interested in ESG? Environmental social governance. What is that? Why am I talking about it? Well, let me ask you the question a little more broadly, a little more specifically. Are you interested in investing in a way that your investments reflect your values? Now you get a sense of ESG. In other words, a lot of folks don't like tobacco, they don't like gambling, you don't like nuclear weapons, and so you wouldn't want to invest in companies that are growing tobacco, right? So this is a way for people to invest their money in a manner that is consistent with their values. And Wall Street has really exploded in the availability of investment products, mutual funds, exchange-traded funds, and others that purport to tell you whether companies are scoring high on measurements of ESG. These three different categories reflect different sectors of the value marketplace. E for environment. We all are focusing on climate change, and everybody's trying to get away from fossil fuels and emphasize green energy, etc. So you might like to invest in companies that score high on the E for environmental values. How about the S, social? This is dealing with companies that provide fairness and equality. They don't discriminate based on gender or race or you name it. Or how about governance? You want to make sure that this company is providing data fairly, accurately, openly to shareholders and the marketplace, that the board of directors isn't doing something behind closed doors in a smoke-filled room, that the decisions made by the company are fair and equitable for investors and for shareholders. So the G for governance. ESG is now a really big theme on Wall Street. Morningstar says that ETFs and mutual funds that are ESG focused are now managing $3 trillion in assets. But here's the problem. As companies try to score well on E, S, and G, the question becomes, score well by who? I mean, who decides whether you are doing well on the environmental, social, or governance scores? So now there's a new study that has taken a look at 6 different ESG ratings agencies, and they found that they used a variety of metrics to determine whether a company is scoring well on E or S or G. How many different metrics? 709 different metrics across 64 categories. I mean, how can anybody decide if any of this is making any sense at all? In fact, of this entire broad array, only 10 categories were found within all 6 of these ratings companies. So you really have to wonder, who's regulating all this? Who's deciding what counts and what doesn't? Let me just give you 2 examples of how silly this is. One company issued a 200-page report showing how strong it scores on ESG. Do you know who the company is? Altria, a tobacco company. How could they do this? Well, they showed that they are doing very well with corporate governance, and they showed that they're doing very well in their hiring. They have a diverse employee base, and they don't discriminate in wages and salaries based on sex or gender. So they score themselves really well on ESG. Go figure. Or how about this example? Standard & Poor's, S&P, has an ESG version of the S&P 500, and they just kicked Tesla out, but they kept in ExxonMobil. Wait, Tesla makes electric cars. That's like good for the planet, isn't it? But ExxonMobil burns fossil fuels. So how could they throw Tesla out but keep ExxonMobil in? It just demonstrates that the way these companies are describing themselves and how the ratings agencies are evaluating them sometimes leaves you scratching your head. Oh, and by the way, if you are really thinking about investing in an ESG fund so that you feel better about your investments, a study by the London School of Economics and Columbia Business School found that ESG funds cost 50% more than other mutual funds and ETFs. They looked at the fund companies that offer stock funds and ESG funds. They looked at them from 2010 to 2018 and found that companies that are offering ESG funds actually violated labor laws more, paid fines more, had higher carbon emissions more than the companies that weren't in the ESG funds. It really makes you wonder how they're figuring all this out. So before you decide to invest in an ESG fund, maybe you should invest in those tobacco companies and donate the profits to the American Lung Association. I'm Rick Edelman. This is the truth about your future. Time now for everybody's favorite segment of the program, a visit by my wife, Jean Edelman. Jean, a student of the healing arts, Reiki, traditional Chinese medicine, homeopathy, acupuncture, and of course, macrobiotic and plant-based cooking. Here's Jean.
great to be with you this week. This week, my word is optimism. If we let it, the world gets pretty heavy. Now, we want to stay current, but we don't want to get pulled into the constant worry. We need a break. And so I have 5 little suggestions to help us stay optimistic. First, let's savor the good. Our minds at times are like a TV channel, and we keep playing the reruns. But it's good to change that channel. Go find something happy in our life. Go find something happy and fun to do. Because when we want to replay that channel, we want it to be fulfilling and joyful and refreshing and just be filling us with something optimistic and happy, not the opposite. We want to reframe. Number 2, we want to reframe from the negative. We are given challenges to learn and grow. And when we're faced with something, let's just stop and reflect. Find 2 good things about it, whatever it is, because these are learning moments. These are moments when we are meant to grow, to be better, to find out pieces of ourselves, and to get stronger because of what is occurring. Number 3 is take action. Small goals that are achievable. Life is really about all these little baby steps that we can take along our path. And so just find realistic goals to be optimistic. How about number 4, writing a positive letter to ourselves? Sit down and say how beautiful we are, how talented we are, and list out the things that we're really good at. Write a letter to ourselves, reminding ourselves of all these wonderful traits. And I'll bet we will have forgotten some of them. And so sit down and write these out and then revisit that letter. And number 5 is surround ourselves with positive. Be mindful of the social media, be mindful of the TV, find happy, positive feeds, listen to upbeat, happy music. Find a funny movie, stop hanging around with negative people, find some new friends if you need to, because wherever it's coming from, we don't want to get bombarded with this. And so we need to protect ourselves and surround ourselves with positive. It can be really easy to go down this path of negativity, to keep watching those reruns in our mind, but it takes these small, very intensive steps to move towards being optimistic, and we can do it. Be mindful of all these outside influences, and if we have to, and when we need to, just go within and breathe and find our own little quiet. So our action item for the week is to make the necessary changes to bring more positive into our day. And our word of the week is cheer. The C is for change. If it no longer feels good, make the small changes so that we can feel happy and content. Say no to relationships and situations that no longer feed us and make us feel good. Keep moving forward. Don't look back, because the future is anything that we want to make it. H is for help. Do not be afraid to ask for help. We are not in any of this alone. We need professionals sometime to help us kind of reset and restore. So don't be afraid to reach out. And we need to lean on each other, and we need to talk. Find help if you need it. The E is for ease. If something's too difficult, stop. Don't do it. Find another way. It should be fun. It should be easy. The other E is for empower and to allow. When we're rigid and locked down and stuck in that TV replay, we're not able to move forward, and we need to empower ourselves. We are in control. We can make the changes to be happy and we can make the change to a very content and wonderful life. And the R is for rare, because we are such gifts to this world, and we need to hold that in our hearts. We are meant to shine and smile upon each other every day and bring out that light. And so find that optimism this week. Sit down, reevaluate things that aren't working. Say no. You have permission to say no if it doesn't feel good. Find another path. Find what makes you happy. Have a great week, everyone.
I know you can't get enough of Gene. Well, you can go to thetruthayf.com for more of Gene's Words of the Week.
Did you know Schwab offers a satisfaction guarantee? If for any reason you're not completely satisfied, Schwab will refund your fee or commission and work with you to make things right. You won't find that kind of promise everywhere, but you will find it at Schwab. It's just another way that they put clients' interest at the heart of everything they do. Learn what's included and how it works at schwab.com/satisfaction. That's schwab.com/satisfaction.
You're listening to The Truth About Your Future with Rick Edelman. Thanks for listening to today's show, and thanks to Bitwise Asset Management for being our sponsor. Rick asked Bitwise to support the show because Bitwise has just one mission: to help you understand and access the opportunities in crypto. As crypto continues to grow in scale and complexity, a trusted guide is more important than ever. That's why Bitwise has built a nationwide team of crypto experts to help you. So take advantage of Bitwise's team. They work closely with financial advisors, institutions, and individual investors just like you. Talk to a Bitwise expert today, or sharpen your crypto knowledge with Bitwise's awesome library of content. You'll find great help, whether you're a crypto beginner or a financial professional. Crypto has major risks to consider, including the loss of your entire investment. So before investing in crypto funds, visit bitwiseinvestments.com for their library of content and to learn about the risks with these investments. That's bitwiseinvestments.com.
Well, that's all the time we've got on The Truth About Your Future this weekend. Remember, sign up for my new master class, Financial Planning in the Age of Longevity. It's free at thetruthayf.com. That's thetruthayf.com. See you next week.
Bye-bye.
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 I'm sorry, what? What part didn't you understand? The buh or the bye? Bye-bye.
The Truth About Your Future with Rick Edelman has been brought to you by Global X ETFs, dedicated to providing investors with unexplored and intelligent solutions. And by Bitwise, a trusted guide in crypto has never mattered more. Connect with their dedicated team of crypto experts nationwide at bitwiseinvestments.com. And by Invesco QQQ, a fund that allows you to access the innovators of the NASDAQ 100. Invesco.com. Stay tuned for Everyday Wealth with Soledad O'Brien and Gene Chatsky from Edelman Financial Engines. Everydaywealth.com/radio. EFE and The Truth About Your Future with Rick Edelman are unaffiliated entities.
Get the truth about your future every weekend with Rick Edelman. It's thetruthayf.com.